Hi, the global markets bounced back for the past entire week after going down for two consecutive weeks. There was some amount of positivity in the global markets, primarily triggered by the positive sentiments around the US and China trade discussions, which are starting this evening for the next 2 days. The officials are going to be under discussion. So that's some amount of optimism across the global markets. Also, the commentary by US Fed Chairman Powell has stabilized the markets when he's talked about expanding the balance sheet for accommodating additional funding. While these positive sentiments did bring the markets upwards, there was some amount of concerns when US had some visa restrictions on Chinese officials. So that capped the upside in the market. US and Europe was up by about 1% for the past entire week, while Asia was a little tepid. It was up by about 0.8% for the past entire week. The Indian markets, however, couldn't take heart from the global markets up move, and it was in spite of the 25 basis point rate cut by the RBI has not enthused the Indian markets. It was primarily beavering down under the concerns of the slowdown and the Q2 earnings, which are around the corner. The Indian markets did touch a high about 11,400 for the week, but it couldn't sustain that and went down to about 11,090 odd levels to close at about 11,234 odd levels. It was down by about 0.7% for the entire week. The primary sell-off in the Indian markets was triggered by the Q2 earnings, which came by in the banking sector. IndusInd Bank was down by about 3.4%. In terms of the profit degrowth happened at about 3.4%, which was primarily on account of higher provisioning. So that's sent corrections across the banking sector. The automobile sector is already reeling under pressure. Overall, for the Indian markets, all the indices were negative. Primarily, the pharma, metals, and banking sector was down. Each of them were down by about 3.3%, and 2.6% respectively. In the coming week, the markets are expected to be tentative in the Indian context. It is primarily going to be triggered by the Q2 earnings. The entire discussion has moved towards the Q2 earnings, and hence it will be stock specific. Any negative signal in the global markets will take the Indian markets downwards. So what we would request you to be stock specific and focus only on fundamentally strong stocks. That's our outlook for the markets in the coming week. In terms of our stock recommendation, we have a buy recommendation on Hikal. We have a target price about 167 odd levels, which is an upside about 17.5% from here on, and a stop loss at about 130 odd levels. In terms of the Hikal business, there has been some amount of positivity in the earnings. They have grown by about 17 points. They have grown by about 24% on the top line and 17.7% on the bottom line. We expect this amount of positivity to continue from FY 19-20 to about 22, FY 21-22 as well. So we expect the results to be robust in the coming few years. In terms of the business, they have a strong mix in terms of the pharma business contributing about 42% and crop protection business contributing about 58%. They have spent about 500 crores over the last 5 years in terms of increasing their capacity, and we would see this contributing in terms of their results in the coming few years. The management pedigree is quite strong. They have successfully gone through FDA audits for the past 5 years without any observations. So that talks about their quality and proficiency in the business model, as well as the promoter holding is at about 68.7%, including the Bharat Forge Group. So that's a stable business model that we are looking at. They are the leaders in gabapentin, and they have about 40% market share, and this is expected to be persistent. So we do have a strong, robust product penetration that we see in this business. In terms of the opportunities that would arise out of the trade tension between India and US, there is enough amount of opportunities that we can expect for Indian businesses in API as well as crop protection. So that is going to benefit Hikal. In terms of their valuation, they are at about 15.63 P levels as compared to the industry P of about 26 odd levels. So there is reasonable upside room that is left for the stock, and hence we expect a strong up move in the coming year. That's our recommendation. Thank you.